Type 9. Type 9. Type 9. Type
9. And we are live. Good morning and welcome into the live stream as usual. We are back on a Monday after a long weekend, and we are going to do a breakdown today for the pre-market. There is quite a few things that we'll be going through today, so I'm going to try and speeding things up, and then we will have Q&A at the end as usual. So prepare your questions, start posting them, and then I'm going to read them later. So we're going to go through our usual drill, looking at the news first. And I saw this article about from Wall Street Journal about how the coronavirus spread through corporate America, how it was affecting it. Forecasting of profit has now gone down. Many companies are withdrawing their guidance. Look at the amount of companies, 295 companies, which is quite a lot. That's almost more than, let's see, S&P 500 is 500 plus companies, 505. So this is almost more than half. Okay, and they've all withdrawn guidances. and closed stores, and um, then we have credit drawdowns that are 257 companies that have drawn down on credit. So we know half of the companies within the S&P 500 are having a credit crisis. And these are all basically building on the bear case. I'm going to go through two cases today. We're going to go through a bull scenario and then a bear scenario. And the bear scenario is going to be reinforced by what we have been going through for the past few weeks. And the bull scenario is going to be accredited by a trader that I follow. His name is Adam Koo. I really like the way that he does his analysis as well. And I'll go through with you what I have consolidated the information from him through his channel, and so that you don't need to go and do a whole runaround again. So you get it all, the bear and the bull scenario, all here one place. That's the benefit of coming to these live streams. I do the hard work for you, so you just need to sit here and listen to the summary. In other news, we also have dividend cuts and stock buybacks that have reduced. And then CEOs cutting their salaries, and a lot of furloughing as well. So 72 companies have slashed dividends, which is not a good sign. And executives have taken pay cuts, 145 companies. And also furloughs have been going on. So people have been getting, retrenched and kicked out of their jobs, or temporarily unemployed, which results to such huge unemployment numbers within the US economy, almost 100 companies. So yeah, that's kind of like a overall macro view, some numbers that you should be aware of, how the companies in US equities are faring. There was also another article that I saw about WHO, World Health Organization, saying that 70 vaccines are in the works, and there are 3 leading candidates, with CanSino Biologics, Moderna, and Inovio being the top 3 in phase 2. However, I'm pretty sure that Remdesivir by Gilead Sciences is also in the running. I'm kind of appalled as to why the news didn't report this. From what I know, even though it's not a direct coronavirus drug, it is being tested to use to combat coronavirus. It's more of an Ebola drug, but my long-term position in Gilead is still going to be a hold. I like the company. I like what it's doing besides the vaccine for coronavirus. If it does get the approval to make coronavirus vaccine, that will be a nice icing on the cake. So Amazon, Disney, Tesla that I was seeing pre-market movers today that you might want to keep track of. Square is also behaving, going in tandem with the market. So those will be all tickers that you want to shortlist for your watch list today. Other news, let's see. I don't see much other stuff that is worth noting. Oh, we did have big news about the oil situation being kind of resolved over the weekend. However, I must say that after doing some additional research, I don't think that the amount of production cuts that have been agreed on is going to be enough to stabilize oil prices anytime soon. See, the thing is, when you cut supply and demand doesn't change, you have to keep cutting supply. And at this point, we haven't cut supply enough. Only 10 million barrels doesn't make a big difference. Okay, and here the other thing is, so we have demand that has fallen by about 30%. Okay, let's see if I can pull this up here to draw it for you guys in figures and numbers. Okay, so demand has fallen by about 30%. Okay, for oil, we're talking about oil now. And oh my god, this is so thin, I need to make it thicker. Okay, so we have about a 29 million barrels per day of oversupply. Okay, and we have only cut okay, and then take into account that maybe some go into reserves, right? Because the US and other countries are building reserves, but this surplus is still too much based on the minus 10 million barrels per day cut. So we have a additional of about 19 million barrels of oversupply still in the market. Okay, which means that oil prices are not going to stabilize anytime soon. I think that maybe they need to cut about 15 million barrels or 15 to 20 million more in order to stabilize the prices. So I don't expect like a big move up by oil yet, but we may see some bullishness, and this may actually bring the supply zone back to where it needs to be, and we'll see how that goes. But these are the numbers for now, based on the research that I've done, and that's stuff that you should know about. Okay. What else is there that I wanted to talk about? Okay, so I guess let's get into the technical analysis. I'm going to go through the bear case first, and then we're going to go into the bull case. And the bull case is heavily accredited to another trader that I follow, so it's not entirely my analysis, but I do like the analysis. And there are some other channels out there that are claiming this to be their analysis, but I can tell you right now that this analysis was first done by Adam Koo, and I don't I don't like it when people take things and make it their own without giving credit to the people. It's not the right way to do things. So let's look at the bear case. The bear case is what we've been following for a long time. What I've been saying about the U.S. economy. We had a how many percent? 35% drop from the top to the bottom, which is this fall right here. And then we have a recovery of about 28%. Okay. Now, in comparison to past bear markets, we have seen an average of 50% on the economy drop. So we wanted to see at least another 50% on this drop, but I don't think it's going to be that possible for us to see another 50% drop. However, this economy is far away from recovering right now, right? We still have, as I told you, all the statistics and figures earlier with the Wall Street Journal article, with so many companies having retrenched workers, having credit risk, having all those problems. This economy is unlikely to just make a V-shaped recovery up, right? That's the bear case. I don't see that happening, right? And quite frankly, the issue here is that we are still in quarantine, right? Which means to say we don't have the economy back up and running. So where is the capital flowing back in, right? If there's no capital flowing back in, then there's no money flowing back in. There's no money flowing back in. Businesses don't get cash flow, and governments don't collect tax. So that causes a negative effect down, right? But at the same time, you have the Feds printing and supplying markets with a cushion to provide liquidity and credit, which is what saves the system in the end, right? And then on top of that, we have the unstable oil prices, which oil has been in a downward trend and hasn't been able to recover strongly back up to its highs of the year, which was something like $40, $50. And we still see VIX holding about the $43 level, with bonds still seeing some inflows. In fact, on Friday, we saw inflows on bonds again towards the end of the market, which means people are starting to buy bonds again. Gold also saw some inflows on Friday, right? Before the market closed, we had some nice volume come into gold. So these two things are contributing to the bear case to say that people are still remaining risk averse within slightly lower risk assets, and the climate still seems to be fairly risk averse. So we can build the bear case as far as we want, but there are some things that we have to be aware of the bull scenario as well. Okay, and here's what you need to know about the bull scenario. Okay, so there are a couple of things. The first thing I want to show you is this right here, this image. Okay, so let's look at, this is the unemployment rate versus the 12-month moving average and the US Treasury yield curve. Okay, so you can see the blue line is the unemployment rate. Okay, and then the orange line is the moving average of that, and then the yield curve is the red line. Okay, so you can see this is all the way up till 15, 16, 17, 18. It's up till 2019, you can say. All right, and you can see every time that the unemployment rate reaches a certain level, we are followed by a recession. Okay, a recession like that. So this is going to contribute to your bear case scenario. But you also have to note that right after this period happened, there was a strong rebound. And this rebound, if you realize, happens when for unemployment happens during the recession. So in other words, the economy is not, the market. The market is not the economy because they're two separate things. The market is behaving 6 to 12 months ahead of the economy. It's never that you see that we're going to go into a recession and therefore the market's going to sell off during the recession. That's not the way the market works. The market sees things 6 to 12 months out and starts to price things in. Okay, and this chart is just to show you that we are possibly close to a recession, but we are also close to a bull market scenario where we go back up. Okay, so this is just one thing that I want to show you. The next thing that I want to show you is the treasury bills rates. Okay, and in the treasury bill rate, I want to show you that for the 30-year, which is the last column here, okay, the rates of the 30-year are currently at 1.35 as of Friday, okay, 1.35%. This is the yield on the 30-year bond for the US Treasury, okay? And as you can see, in the entire month of March, obviously at some point we had very high rates, right? And then bonds got bought up like crazy, and then we had very low rates, right? And now we're kind of hovering around 1.35, which is basically in the middle, all right? However, in comparison, so if the yield on bonds are like that, you have to compare them to the yields on the market, right? And so this is the S&P dividend yields, and this was pointed out by Adam Koo, which I really do agree with, because you have to realize something. Look at the yield on the market dividend right now. It's 2.31%, which is higher than the yield on bonds. So if what this means is that if you hold S&P 500 right now, the dividend yield would pay you 2.31% versus buying treasury bills, which are backed by the government, right, that are giving you 1.35%. Now, this means that there's going to be a natural shift of liquidity between bonds and into equities soon. I'm not saying that it's going to be right snap like right now, but you have to keep in mind that liquidity flows where the yield is. Where the yield is, that's where liquidity flows. So if bonds are giving, bonds and the SPY dividend yield are going to be the two things that people are going to trade between. Now, if the bond yields are down, then SPY yields are up, right? So liquidity will flow from there to here. And so you have to be aware of this, okay? Important things. Wanted to point that out for you guys. And then finally, I come to the last image, which I think is honestly the most important image that I want to go through with you guys, which I've been saying for the past, 3 live streams, which I finally found, a visualization that I can show you that, that possibly makes sense and kind of is nice at the same time to look at. So this image shows you that the market is not the economy, okay? And the reason being so is observe how, okay, the red zones are the market, okay? And the economy is the blue zones, okay? And we can see how the various sectors behave with these two market conditions, okay? So these are all the sectors, and this is where these sectors show strengths and weaknesses. So just notice that when the market bottoms first, right? Which is what just happened, right? And then when the recession comes along, the bull market starts, okay? So this gap that you see over here is about 6 to 8 months, as I was telling you. Okay, we are starting to price in the recession when we sold off over here. Oh boy, when we sold off over here, this is where we were pricing in the recession. Okay, now that the recession has been priced in, we are starting to see that the market is starting to rally on bad news. Why? Because there are no more sellers left. How would the market want to sell off when there are no sellers? And the reason why the market's not selling off is because there are no sellers. And the reason why there are no sellers is because everybody's buying. And so when everybody's buying, that's what leads to this rally that you see. Okay, this is the bull case scenario. Okay, this is the bull case scenario. I'm trying really not to be polarized, but I'm giving you both sides of the story so that you can make a accurate judgment yourself. Okay, you may be a polarized bear or a polarized bull. I'm giving you both sides. You decide what you want to follow. I personally, at this point, I have never been so split on a decision in my life. This is easily one of the hardest moments in my life where I've had to make a decision on whether I want to be bullish or bearish. And at this point, I don't want to be either one of them. I don't feel comfortable at all playing either scenario. That's the truth. So I wanted to show you that when the market bottoms, okay, it's already pricing in the recession. This is the recession that comes after the market bottoms, okay? And then the bull market starts. And during the market bottom, finance, technology, and cyclicals are the three most affected sectors, which we have already seen the sell-off. Now, if you realize, technology, industrials, and basic materials are starting to get bought up. This is so obvious right now. You can see technology companies are being bought up, industrials are being bought up, Boeing got recovered, right? Basic materials, like you can see Clorox, you can see a bunch of other companies, basic stuff, they are all getting bought up. Now, we are here. Right here is where we are. We are starting to form a bull market. However, it doesn't mean that we're just gonna go la di da di da 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 da, right? No way. Nothing moves like that. We're gonna see a up and then a down and then a up and then maybe a down and then a up and then a down and then finally up, right? So we have to be aware that this bottom is possibly never going to be seen again. There is a possibility, okay, in the bull case scenario. Now, so what do you do in this scenario, right? Because then you have the recession, and after the recession comes the recovery. But guess what? When everyone thinks the market's recovering, that's when we are at the top, and that's when retail investors start to buy because they're like, oh, now the market is stable. Let's start buying. But guess what? That wasn't the time to buy. This was the time, and this was the time to buy because when you buy here, there's not much room to move up. Do you see that? You have to start buying here so that you can ride this wave up to here. This is where, when the news comes out saying coronavirus is good and oh, the economy is doing much better and we are recovering, that's when the market is already at the top because the market moves 6 to 8 months in advance. So you should start looking at positions within the energy sector, which is the most hit sector, and consumer staples, which we will see great earnings from this quarter. This is the play right now, okay? Be aware. Basic materials as well. You can look at these three sectors and find plays within them. I'm sure that you will find a good play within these sectors, okay? Then comes another bear market. So we're going to cut off the analysis from here because this right now is still going to take a while for us to get from here to here, okay? This is going to be in the future. So we need to be aware where we are in order to trade this market. So I wanted to give you guys a breakdown so that you can see where you're at. Okay. And I definitely understand that probably I had more info for the bull scenario, but that's because, I already covered the bear scenario extensively in the previous live streams. So yeah, okay. For people who are here for the first time, I just want to mention that if this is your first time here, thank you for coming through to, attend this live stream. I hope that this is helping you guys. I always have the view that, if you attend these live streams, irregardless of what I say, it might help somebody. And since I do the research for you, you don't need to do the research. You just sit back and you just enjoy the view and learn and absorb what I'm saying. It's so much more easier for you. Um, and that way we all learn together. When you ask questions, I learn. So it's a win-win situation, guys. Thanks so much for attending. Smash the like button, smash the subscribe button if you are from Options Swing. Welcome back to the stream. If you're not from Options Swing, I don't know why you're not a part of this amazing community. We have a great chat room. I'm not sure what you're waiting for. We have people posting amazing kick-ass trades in here. We have very, very seasoned traders. We have technical analysis being done on a daily basis. I just want to show you how the Discord looks like so you kind of know. We have an education chat that I'm spearheading and I'm a leader of. And then the Everyday Growth channel, which is where I post my content and all of the videos. By the way, if you have attended this live stream, I also wanted to put it out there that today I put out a new video on moving averages, and I would highly recommend, if you're a beginner trader that you're looking to get understanding, or if you're even an advanced trader, go look at the moving average video. It might be helpful to you. And with that said, let's start taking some questions. So post 10 questions and we'll answer them. Let's see if we have any here. All right, good morning. Great. Yes, remdesivir or therapeutic. Okay, cool. Sorry, I'm not a doctor, so I'm not really very sure. But as I said, like I was sure that it was used for Ebola. I guess it's not a vaccine, but I'm pretty sure that they have a good chance at curing coronavirus. There was an article posted about it being almost a 70% success rate with people, which I'm kind of hopeful about. Agreed, better, both sides, not better, but this is true. Thank you for saying that. One of your best videos. Thank you very much, Daniel. I appreciate you being here. And how do you think banks will do earnings this season? Oh boy, that's a loaded question, my friend. So there's a couple of ways that goes, right? With banks, the issue is when interest rates are so low, banks can barely make any money, right? If interest rates are almost at negative levels, then the bank doesn't have any margin to make any money. So mortgages are affected, and then don't forget that they are mandated by law now to basically allow mortgages to be defaulted, so-called. And the Fed is taking all of this on their balance sheet. So if you ask me, we need to see some kind of a very hard line drawn by the Fed in order to properly let banks cushion this scenario. But I don't think that banks are going to do extremely good for this earnings season. However, we may see some surprises. You never know which bank, especially if it's an investment bank, they might have made money during the downturn. So I would say possible bullish scenario for IBs, but for commercial banks like Bank of America and Wells Fargo and it doesn't look like a good earnings season. How do I set up a scanner on TOS? Boy, that is a question. If you are on Option Swing, I believe that we have a tutorial on that. It might be on tools. You know what? Maybe I'll do a video on how you can set up the scanner on TOS. And that'll be easier. To actually show you how I set it up, it's going to be really difficult and time consuming right now. But I can work on this and try and do a video for you. Let's see. Hey, you mentioned you will look into making a tutorial on how to use TOS. Still waiting. Okay, great. I see that there's a lot of requests for these, so I'm gonna go ahead and do that for you guys. Just be patient, and I'll work on that as the next video, or I'll find a video and maybe give it to you guys so you guys can have something to look at. I've been told markets have rallied just to drop further, or maybe in June. If we look at prior recession depressions thoughts, so as I said, that's the bear case scenario, right? That this is a dead cat bounce, and if you realize and you remember, I did say this was a dead cat bounce, right? And we are starting to see that we are unable to break the 50 fib, which also coincides with the 50 moving average, right? Seems to be like a very, very strong resistance level. So we may see an extension to the downside back to 23.6 or to the 38.2. We'll just have to see what kind of volume we break. As you remember, you can see this right here. We have been rallying on low volume, right? And the low volume is means there are no sellers in the market, right? If price is moving up on low volume, that means nobody is there to sell. They're all buyers, right? And that's what we call decapitulation, right? It's when there's no person who is willing to sell in the market. So possible that we see another drop, but we're gonna have to see how it plays out, man. I honestly, as I told you, I'm 50-50 split right now, and it's a really difficult question to answer. I understand the liquidity falls towards deals, but there's a risk of SPY going down and being negative, providing you with less over yield. Would that make sense? Yes, sure. That would make sense. However, you have to also take into account that right now SPY will more than likely trade in a sideways channel, or even if it goes down to test these levels here, that's 20% recovery up from the bottom. This is a 20% recovery so far. Actually, it's not 20%, it's more than 20%. I actually wrote it here. Yeah, I did it here. 28%. And 28% recovery from the bottom is usually the end of a bear market. That's it. I think according to trader sentiment, it's 20%. For a 20% recovery from the bottom is usually the end of a bear market. That's what is the sentiment. Of course, it could go anywhere at once, but yeah, there is a point to be made that the dividend yield might go down. But as long as bonds are not as attractive as SPY, then people are going to continually put the risk in the stock market and buy the entire ETF. What are your thoughts on the projections for airlines these upcoming days? I actually really like airline plays. In fact, I do like UAL. I was looking at that. They have earnings coming out this week. And I was thinking of actually playing this as a earnings play. I know that it's probably one of the worst things that I was going to do, but here's the scenario. I was doing the breakdown, and the cost of the premiums to buy UAL options for next year or into January are super cheap. Like you can get them for $300 or $400 for a contract. And I really like this play. If you're an option swing, just stay tuned. I'm gonna post the play on. I'm gonna post the play along with the breakdown for this ticker symbol. I'm not sure if I'll do it today or tomorrow. I'm gonna wait for it to see how UAL recovers, but they post earnings next week, and so I'm thinking to play the IV buildup, and then if the earnings goes well, I'm gonna hold the contracts, but I'm gonna choose a long expiry contract so I can lower my risk on that. Why did oil sell off with the OPEC deal? Was it the buy rumors, sell news? Also, since market price 6 months, widen the price and further OPEC cut deal. So I'm not sure if you were here when I just said this earlier. The reason why oil sold off is because the cuts weren't enough. As I was saying earlier, we need about 30 some million barrels per day of a cut. We've only achieved about 10 million. We need 15 to 20 million more of cuts to be done, bearing the fact that we have residual flow economy that needs that has almost slowed down its demand by a huge amount. That's still a bearish scenario for oil. AMC approaching all-time lows and talk higher bankruptcy, possible opportunity to pick up Jumanji. You typically go from different bankruptcies before actually going. So AMC, let's look at it. AMC. Yeah, this. Oh wow. I might not play this one. Let's see. What can I see over here? Data. There we go. Okay, so. Well, with AMC, the thing is, I try to avoid trading stocks that are such low in value right now. These are plays that are like lotto plays. I mean, it would be worth a shot, but you're kind of stabbing in the dark there. I try to stay away from these kinds of stocks, especially if they have a low market cap. I would go light on this kind of a risk. Go very, very light on it. All right, Chip, I will make sure that I put a video on the how to use TOS. I'm gonna find one, or I'll make one myself. Either way, I'll put it on education chat for you guys to have a look at. What are your thoughts on the E-Trade platform? I've never used E-Trade. I heard it's pretty decent. It's similar to Thinkorswim, I think. Yeah, there you go. It's similar to Thinkorswim. Will all companies do well today? Most likely overextend over the next few days. Good to run up after OPEC agreement. I think that playing oil is a great strategy right now, especially if you long oil for buy contracts like how Jose or Jim had on Friday. If we had positive news about how oil developments were going underway, we would have seen a big run up of oil. But right now, I think it is honestly it is a good time to make an oil play. I personally think so. Like you see, I avoid buying things that are already up. I would buy things that are being sold off right now. You gotta buy when people are selling. You can't buy when people are buying. That's just the wrong strategy to go with. So I still see oil, in this downward channel, and yeah, it could possibly go lower. But guess what? We're pretty much at the bottom already, right? We went down to $21, and I don't know if we went down further than that, but I think maybe we reached 19 at some point. Did we? Something like that. Let's see. Yeah, we did reach 19 something. But you see, you can pretty much see like we're at the bottom, right? And this situation is gonna possibly get better. So if OPEC decides to cut more, then the oil prices are gonna rebound. So definitely playing oil is a good play here. I would play oil. I think it's a good one. It's a good play to play right now. And I would definitely try to get into oil positions now because that would be the cheapest right now. People are still bearish. Do you use the ATR to determine movement within stocks for the day or time period? Actually, this is a great thing to also determine the movement within stocks. So ATR, for people who don't know, is the average true range, which actually measures the volatility within a certain ticker symbol. And actually, ATR is a good way to tell if ATR has to be used in conjunction with RSI, which is a relative strength index, and that usually gives you a good view on the movement within the stock. So if ATR is low while RSI is high, then you have a confirmation of a bottom or a top, and then the converse is true for the opposite. So yeah, I don't use it, but I know about ATR and how to use it. So if you were looking to study more further, I would pair ATR with RSI. And when RSI is low and ATR is high, that's an oversold condition. And then the converse is true for the opposite scenario. Where do you think we are at on the image of bull plus bear market? Could you clarify that question? Because I'm not really sure what you mean. As I just said, I have a really 50-50 split decision right now, and I gave you guys both my bull and bear scenario. So maybe you can provide some color on this question so I can answer it better for you. Yes, it is Omar, but we'll figure out. Okay. Hey, Chip. So we should have some. Okay, there we go. Cool. So yeah, do you guys have any more questions for me? Let's see if we can get one or two more questions in. If not, I'm gonna end the stream here. Remember, we did see, and actually, you know what? Let me just check really quickly if we did indeed see flows into gold on Friday. Yes, we did see gold. So we did see buying. You can see the OBV spike up here towards the end of the market. Close on Friday, hence people started buying gold. I don't know if gold is going to gap up today, but we'll see. As of market opening today, we're seeing SPY rally up from this consolidation where it sold off actually, and then now it's starting to rally up back again. My guess is that it's going to try and test the 50 this 50% Fibonacci retracement again, which is where we have been having a very tough time closing. And yeah, so we've been kind of consolidating here, and let's see what happens. This week is going to be a very, 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 very important week to determine where the market direction is going to go. And I am leaning more towards a bullish scenario than a bearish scenario. However, I'm still 50-50 split, and I am not going to make any plays until I can tell that there is going to be a clear decision. However, I must say that I'm already going to start to nibble at some small long-term positions that I have already been consolidating. So things like Tesla, Amazon, Microsoft, and Facebook. Those are my choices right now. Okay, I'm going to buy a couple of shares and just keep them. It doesn't matter if it goes down. I'm willing to hold them. They're great companies. So let's see. Buying USO long. Yeah, that was one of the plays that, if you want to play oil, that's one of the ones that you can play. MRO is the other one that I got into on Friday along with Jim. What are your rules for being a profitable trader? Well, it's definitely. I mean, I could do a list if you want. Similar to majority of what other people would tell you to do. However, I have a big rule of not following the herd. And I tend to go against the grain most of the time because I know that being a contrarian trader allows me to have the approach where I'm doing what not other people are doing, and I tend to go against the grain most of the time. Uh, but then you also have to have very good discipline with the risk management. So make sure that you cut your losers very early and you let your winners ride. And I know a lot of people have problems with this, so this would be definitely something that you got to focus on. Will you post your play for the airline company on YouTube or your channel? Yeah, I could. You know what? I'll make a post about it on Instagram as well. I usually post what I post on the channel on Instagram. So stay tuned on Instagram. I'll make kind of a post for it so that you can have a look at it, and then you can see if you want to follow the play or not. Bulls are winning the battle short term. However, bears win the war. I think it's the opposite, bro. Bears win the battle, bulls win the war. That's the saying. It's bulls always have the last laugh, you see, because they are always winning. Bears, they have these temporary wins in these battles, and you gotta always be aware of that. All right. Well, I'm gonna try and end the stream here, just in the interest to keep it short. If you haven't subscribed, subscribe. You'll get notifications. I did post a new video about mooring averages. Go check that out. I spent a lot of time designing these things for you guys so that it's easy to follow. I hope that you enjoyed this live stream, and thank you so much for tuning in. I will see you guys on Wednesday. Thank you, and have a great day. Happy trading.